Let's talk about Sydney Sweeney, and specifically what she means for American Eagle, and why it looks like Wall Street may be wrong again, this time on American Eagle, and getting pessimistic.
But maybe fundamentally there's a change here, and this price really has maybe more upside than downside, and it's not just another meme to be worried about.
Stock earnings and
favorite pastime.
So let me just say,
pitted with Wall Street
It's
is
2.5x
because their compensation goes up.
Wall Street's wrong again. All right, Joel, let's talk about something that's been pretty hot in the news, American Eagle and Sydney Sweeney. It seems, from our look at it, like people are getting a bit too caught up on the ad and not focused on whether or not this actually means something important for American Eagle or not. You want to jump in?
Yeah, all the controversy, and then the stock popping as much as I think CNBC is missing the point when they say it's a meme stock. Look, the stock has been down for a long period of time. The issue is they've got 1,300 or so stores, and they said years ago that they wanted to move to online because clearly asset utilization of stores versus online sales would be great. They had a target of 50%. They don't perfectly disclose the information, but it would appear that they haven't quite gotten to that level by a long shot. And so with the fall in the stock and then I think they had a negative 5% sales year over year last quarter. They had to do something provocative. They had to do something for the company, right? And they may have done the right thing with the ad. So I don't know it's just a meme stock because the ad, while it sparked a lot of controversy and people complaining about it, the people complaining are not their target market. The Gen Z 18 to 30 crowd has not been talking about boycotting or anything because they don't like the ads. If anything, they've sold out on products that they've been selling online, and it may drive things. So I wouldn't call this a meme stock by any means. I'd say that they may fundamentally be doing something good with the company. And if we look at the returns of the business.
Well, really quickly, Joel, to your point, right, before we even get in the returns, which is why it's so funny that Wall Street's been talking about this as a meme stock, and literally the stock pops on this, which could actually have a fundamental impact. And one of the analysts, Joel, downgrades it, which is like, right, how often do you see Wall Street get it wrong in the wrong direction? But yeah, so let's jump in, yeah.
Yeah, so the analyst downgrades. And yet, when we look at the returns, 2021 was its pandemic year. They were very heavily store dependent. They had not really built anywhere near the online presence that they have today. It's still probably only 30 to 40% online, but still. Then they had a great rebound in 2022 as people just wanted to get out, right? The house and everything else, and they rebounded. And then returns have come really back down again. They've been volatile, but headed down. Wall Street analysts, the one thing we think Wall Street analysts are actually good at is forecasting the next 1 to 2 years. And they're forecasting that the company is going to continue to have the problems that we've seen in the last quarter. Those problems include this 5% year-over-year sales drop. Asset utilization, meaning they're not pushing as much through the stores as they'd like. But I don't know if that's their fix. With 1,300 stores, I don't know if they can fix that. What the real savior of this is, can they boost online sales? And this ad campaign has certainly boosted their sales and boosted online. So this is why I'm saying I wouldn't call this a meme stock pop. I would say fundamentally the thing has jumped. And if you look at what the market's pricing in, to get to the current stock price, the market is pricing in returns that have to fall back to pandemic level year, meaning 2021, when everything's closed. And so given that their mall stores are not going to be as bad as 2021 was with all the pandemic lockdowns, and they're boosting their online sales, you'd have to think that their future returns have a better shot at being above that pandemic year. So it looks like the market, and particularly that one Wall Street analyst who downgraded, are pricing in really low expectations. And if American Eagle can get it right with that, and they've got the Aerie stores also, if they get it right and can fix their online and really boost online to get to maybe 50%, which I think they've talked about as a target of sales, and ideally they get some foot traffic out of these ads and all the controversy and all the free PR that they've gotten. I mean, we're talking about them. Probably I'd say there's a lot more upside than there is downside in this stock.
Yeah, I mean, right, you look at it and you think, I mean, if you just basically get this company to a 6% return on assets, right, which is just, kind of, if you looked over the last, 10 years, since they were not a in fashion brand in fashion, you're looking at a company that potentially is a double stock price here. And just to reiterate everybody, to get back into this, what Joel's talking about here, those white bars, again, are at after the pop in the stock, what the market is pricing the company to do. And the market's basically pricing 2020 pandemic level profitability again for a company that, right, already actually the last few years had seen a recovery. They even had positive same-store sales growth for a couple of those years. They now have, a reason that people are actually paying attention to them. And Joel, to your point, they ordered out, they stocked out literally in, on their online business, which helps them push to that transition. There's a lot of things here, everybody, that says, hey, this is especially for Wall Street to basically be like, oh, it's almost like Wall Street was like, oh, it's like, individual investors are having all the fun. Can't let that happen. Let's pummel the stock down because of the fact that it popped. Like, who downgrades a narrative like that when valuations are this cheap? And so that's what everybody we thought was so interesting. So just want to bring this up to you. Make sure you're paying attention to it. We're not recommending it yet, but this is something that, could actually make a lot of sense for us to have on our radar. So if you like that, and you enjoyed this conversation, hit the like and subscribe button and come back for next week on the Altimetry Authority. Thanks, everybody.